If you haven't seen it yet, Bigger Pockets posted an article called The 7 Reasons Why Housing Market Has Still Not Recovered from the Pandemic. And I feel that this is such an important topic that I will be talking about this and quoting it as it pertains to what we're seeing on the California coast. Hi, my name is Melissa Tierney. I'm located in Santa Barbara, California with Keller Williams Santa Barbara. And I'm on a team called the Complete Real Estate Group. Our focus is working with seniors, their families, and investors on how to build, protect, and transfer generational wealth. We cover on our team from San Diego to San Francisco, and we have active relationships with people all over the country and in many parts of the world, actually. Right now, we have a listing in Istanbul, Turkey. So it is safe to say that no matter where your properties are located, we've got you covered. Go ahead and give me a like in the bottom to let me know that you're here. And then don't forget to toggle that bell so that you don't miss an update. So the first item on this list from Bigger Pockets is that inventory is a mixed bag. Building on the California coast is definitely a challenge, to say the least, but many parts of the country are definitely in building mode. Whereas in the Golden State, the closer to the beach you get, the more saturated and overbuilt it is. ... Safe to say there will never be enough housing to meet the demand for the California coast. Now that changes as one certainly gets east of certain mountain ranges, but I digress. So Realtor.com reports that some cities in Texas and Colorado have actually increased their inventory quite a bit, but regardless of noticeable growth in many areas, um, where we are, we will always be low in inventory, and that's just no matter what. And for that, our prices will forever remain high by comparison. Item number 2 on this Bigger Pockets article: more homes for more jobs in Texas. According to the US Census Bureau, from 2000 to 2022, over 9 million people moved to Texas. And in 2023, Texas population rose by 473,000-ish. The state produces approximately $2.4 billion or $2.4 trillion in new goods and services each year, making it the 8th largest economy in the world. Its gross domestic product grew at a rate of 7.7% in the third quarter of 2023. In comparison, American GDP growth was about 3%. Thus, there's never been a better time to build more homes in Texas due to the influx of new residents needing places to live, regardless of higher interest rates. But the massive influx of migration into the Sunbelt regions like Texas is in large part caused by the pandemic and the shift to remote work. And it is something that we are still seeing 4 years later. It's not as high, but it is still a thing. Item number 3 on this Bigger Pockets article: home prices keep rising. In other states, however, the outlook is not exactly as rosy, and it has remained a component of post-pandemic recovery. So here's an overview of why prices continue to rise and an outlook for investment purposes. The item 1 is that there is a chronic lack of inventory exacerbated by the pandemic with supply chain delays, lack of workforce, the list goes on. It has meant that home prices do keep rising despite higher interest rates. I mean, don't you remember back in the 80s when interest rates were at double digits? According to the National Association of Realtors, in February, home prices were up 5.7% over last year's prices. We are seeing growth. With more buyers than sellers, prices seem unlikely to crash. We haven't seen a crash yet. So if you're looking to invest, other than some overheated pandemic hot spots, where there are some of those in like Midwest and Florida and certainly in Austin where prices have dropped, you'll unlikely lose money on your home's value. When rates drop and prices increase, you're likely to gain equity. And with 2/3 of existing mortgages under 4%, unless there's a compelling reason for a homeowner to move, as has been the case in Texas, expect inventory to remain tight and prices to remain high. What is really sad to see is that the rate of home appreciation in California, particularly here on the coast, it rises at unsustainable rates. People can no longer count on things like a pay raise at work to bump them up to be able to afford the monthly payment on a single family home. If you think about it, if you do the math, the mortgage on a $1.5 million home with 20% down is about $9,000, excluding taxes, insurance, HOA, and necessary updates. So I'm going to digress there. We're going to put a pin on that actually and circle back to that at the end of this video. So stick around. Item number 4 on this list, the lack of competition means now is a good time to invest. High interest rates cause investors to vanish. The only ones left standing are those who have cash to spend on or can be creative or innovative with their financing, which in reality is few people. The lack of competition causes some sellers to become desperate and making them prime targets for investment purposes. According to the National Association of Realtors, existing home sales were actually down 3.3% from February 2023 to February 2024. Which dovetails with the Fannie Mae Home Purchase Sentiment Index released in March of 2024, which shows that an overwhelming 79% of consumers believe it's a bad time to buy a house. Item number 5, the pandemic turned the US into a renter nation. I've been saying this for a while, and this bodes especially true here in our beach town paradise. The median price for a single family home continues to waft between $1.5 and $2 million. So unless you have a combined income of $15,000 or more per month, renting is your best bet. But where they see doom, I see opportunity. Pin on that. High interest rates, high prices, and a lack of housing inventory have made the current real estate market a haven for potential landlords. Housing is becoming a luxury good, which an economist told USA Today, it's the least affordable housing market in recent memory. Somebody else concurred in the same article. And in many United States cities, renting is cheaper than buying, particularly here. According to the National Association of Realtors, the median sales price for existing homes rose from about $350,000 in 2021 to a seasonal peak just above $400,000 in 2023. Obviously, this is in specific markets, but you can imagine that rate of increase and how it parlays over here. It's even higher over here, actually. But the pandemic introduced the nation to remote working, which allows workers to live in new, more affordable cities for a period of time before moving on to somewhere else, which really shuns the idea of home ownership anyway. Side note, more on this at the end of the video. I am working with several investors to do real estate investing out of state, and they are kicking butt. Ping me if this is something you'd be interested in hearing more about. Item number 6 on this list. Landlords continue to see rents increase. We just alluded to this, but according to Zillow, rental prices have increased by almost 30% since the pandemic, clocking in an annual increase of 7% over the last 4 years. Although 2/3 of increases happened in 2021, the after effects of high inflation and lower rental inventory have seen rents trend upward from a year ago in 47 of the 50 largest metro areas of the United States. The largest rental drops were only modest, less than 0.5% in some cities that had witnessed some particularly exuberant growth. This means prospective landlords buying investment properties today can benefit from high rents to match their high interest rates. However, landlords who buy cash or assume a mortgage will benefit the most. Lastly, the housing market is uneven. This is point number 7 on the Bigger Pockets article. And it says the surge in February sales demonstrates the robust demand across various markets. Buyers are actively seeking properties, indicating a very buoyant market. Additionally, as the market continues to recalibrate, both buyers and sellers are reassessing their strategies and moving forward with plans they may have previously delayed. So the term rebalance is only relative. with most of the country still inventory starved and not yet back to pre-pandemic levels. This is straight from Bigger Pockets. With a strong jobs market and healthy economy, home sales are down to how many homes builders can build and whether homeowners with the high rates can afford them. Another factor is whether builders can afford to build the homes. Lenders are skittish about financing homes that might not sell due to the high interest rates that are out there and the construction costs that have soared since the pandemic. And the result has been a lag in new homes despite the apparent demand. So, final thoughts on this. I always tell people to date the rate and marry the home. That has been some pretty good advice from different investment experts, and it's certainly something that we say around here in the office. We are still looking at 7-ish% rates, which is a pandemic holdover from stimulus checks and really high inflation. When rates do eventually come down, you've got to be prepared for this. Expect a buying bonanza and more price hikes because you're going to see more bidding wars or just bidding wars in general, and no contingencies. And so my point is if you can, and this is direct from Bigger Pockets, if you can afford to ride out compromised cash flow, now is the time to buy. So another thing to consider, invest your money in a market that you can afford, and then use the equity from that investment to buy your home here in California. Right now, I have people investing in many places outside of California, and they are proving to be very lucrative investments. We are seeing really great things like cap rates over 6%. In some markets, it's 8%. In some markets, it's 10%. But regardless, you do see things like landlord-friendly laws. You do see a good long-term appreciation play and high growth. As mentioned earlier, there is a lack of nationwide inventory. So why not use that in your favor? Talk to me about this. I can definitely help. My contact information is below in the description. If you liked this video, give me a thumbs up and don't forget to toggle that bell button. Cheers.